Let's move on with some business news now. Stephen Carroll joining me, enjoying the story of Grandad the fish there.
I can't believe fish can live till 90. I had no idea.
Isn't it amazing? Outliving most of us, I think.
Astonishing, well, definitely, yeah.
Yes, with the way we're going with our early starts.
Exactly.
Let's move on from something very, very ancient, the lungfish, to something very high-tech. In the United States, apparently, TVs have been spying on their owners. That sounds rather sinister.
Certainly does. Vizio, the TV manufacturer, is to pay $2.2 million to settle claims it illegally collected information on what users of its smart TVs were watching. According to the US Federal Trade Commission, the company gathered viewing data from 11 million of its customers without their knowledge. It then sold that information on what people were watching, but also personal information like their postcodes to third parties. Vizio says the data couldn't be used to match up individuals to the information. As part of the settlement, the company has agreed to delete the data it's collected so far and to seek express permission from users before collecting any further information in the future.
Perhaps they might have thought of that beforehand.
Perhaps.
So there we go, and probably a warning to other companies as well. Can you tell us a little bit about what's happening on the markets right now?
We've got European shares opening the trading session in the red, banks leading the falls, in fact. That's after results from BNP Paribas. I'll have more on that in a moment. Societe Generale down 3.5% in Paris. Credit Agricole down 2%. Falls, though, across London, Paris and Frankfurt. In Asia, we falls across the board as well. That was following on a negative lead from Wall Street. The Nikkei in Tokyo finishing the day down 1/3%.
All right, you got a story for us from South Africa, where it seems things are looking up for the very important mining industry.
After years of low prices, job cuts and strikes, growth is finally returning to the mining sector in South Africa. Prices of raw materials are rising, which is helping to boost this important sector of the country's economy. It's led to a more upbeat mood at the annual industry conference in Cape Town. Solange Moujon has the story.
South Africa's mining sector has been hit by years of plunging prices. But now the price of commodities like iron, copper and tin is on the rise. It's created a sense of optimism among investors and mining firms gathered at Cape Town's mining conference.
I think the global outlook for Africa is improving at the same time that I think that the outlook for the mining industry is improving. Improving not maybe to the extent that we enjoyed in the middle of the last decade, but certainly compared to the conditions that existed 2 or 3 years ago.
The aftermath of the 2012 Marikana mine shooting and frequent labor strikes had created a volatile climate, one that was only exacerbated by slumping prices. But now the World Bank's forecast says that the worst is finally over due to strong Chinese demand and tightening supply. They predict the price of metals will jump by 11% this year, a boost for many countries.
The whole Africa rising story really arose out of the last commodities boom in Africa. So, if there's another commodities boom, that will be, I think, potentially quite transformational for African economies.
But some warn against over-optimism, burnt by mine closures, job cuts and protests.
Companies have gone bust, a lot have had to merge, retrench, so people are very wary.
The industry makes up 7% of South Africa's economy, so the ups and downs of mining have a direct impact on South Africa's growth. With a new draft of the country's mining charter slated to be published next month, how the government, businesses and miners see the future of the industry will once again be up for debate.
Some more of the day's business headlines for you now. Uber is said to be prepared to offer drivers in France a minimum monthly income if they drive 50 hours a week. This is part of a deal being negotiated by a government-appointed mediator after drivers staged protests over their low pay. The ride-hailing company is resisting efforts to date to increase its rates and is instead suggesting it'll ensure full-time drivers earn a minimum of €4,200 a month. The French bank BNP Paribas is to invest €3 billion in boosting its digital operations as part of an effort to cut costs in the future. Annual net profits of the lender jumped by 15% last year. Investors not impressed though, their shares down around 3.5% in Paris. And a surge in oil prices has helped the oil company BP to double its profits in the last 3 months of the year. That was still less than had been expected though. The company did raise the amount of money it plans to spend on capital investment this year by $1 billion, a sign of returning optimism in the oil industry.
All right, one final story in our business roundup. But this is a very interesting one, especially for us journalists. It seems Google and Facebook beginning a drive to tackle fake news, which, of course, was so prevalent during the US election campaign.
Yes, that's right. And it's targeting the French election campaign this time around. The tech giants rolling out tools aimed at stopping the spread of false information during the run-up to the 2 rounds of voting here in France in April and May. Google's non-profit arm First Draft News has signed up 15 French news outlets, including France 24's observers, to help it find and verify information circulating online that's relevant to the election. Facebook, for its part, says it'll begin introducing a tag allowing users to flag stories as disputed. Both companies faced heavy criticism, of course, in the United States after the fake news scandals there, so trying to do things a little bit differently in Europe.
Very interesting indeed. I'll be very interested to see how that pans out. Thanks so much. It's Stephen Carroll, our business editor.